All right. Sorry, guys. It's 6:33. Again, for some reason we had a little connection issues here in the Short Hills office, but here we are. My name is Scott Redler, Chief Strategic Officer of T3Live.com. I wanted to make sure that I could get this 6:30 club going because I know a lot of people out there are very concerned about that financial health, about what's happening, and hopefully many of you that watched last week, saw the big sell signal on Thursday on top of the sell signal from April 5th. So I would think that most guys are in lots of cash, maybe short, or at least very tactical and letting the market play out. Sometimes that's what you have to do. So with that being said, let me say hello to some of my dogs around the world and put up the chart here. You can see a lot of the things we've written on the chart. What up, Chief Paper Hands? I just saw you just joined up 7 days for $7. That's good. I think it's a good time to be part of the Alpha team. We got earnings coming up this week. We got lots of things happening, lots of stocks breaking daily charts, testing weekly levels. So, a lot going on. What up, DeQuesta? How you doing? You with your grandkids watching? Well, teach them a little financial literacy early. Very, very important. For some reason, they don't teach that in school much anymore. What up, Jay Rapasol? How you doing, my friend? I always like your little picture. You look very dapper with your glasses on. Cheers to everyone for tuning in. In markets like this, you need to be prepared. You need to know your levels. You need to know what you're looking at. You need to know what the leading indicators are. You need to know where the clues come from. And if you remember, over the course of the past 2 weeks, we've been taking our clues from the weakness in stocks like NVIDIA, stocks like AMD, making lower lows, being sold on strength. That gave us some clues that tech was not a healthy place to be if you are active. Then all of a sudden you get Netflix that was cut in half prior to numbers. And then when they came out and got cut in half again, it just triggered sell-offs everywhere. And rightly so. So anyway, you got your ice coffee ready? That's good. How you doing? Yeah, China followed our lead lower. From Thursday's open after Tesla's earnings, basically to Friday's close, I think the NASDAQ itself, the Qs fell 5%. So imagine how much some individual stocks, like a Netflix that fell 37%. Well, that's off. So, lots of damage out there, lots of technical damage, but this is something that's not new. We've been living in this tape for a while now. Every now and then you get a little different active sequences to try and maneuver, especially if you're active and you trade for a living. And if you're long-term and you're putting monthly flows in every single month, this too shall pass. Okay, just only contribute what you can handle. Don't go over your skis. And if you're trading, you know what? If you've read my moving average book, I think like 27,000 people have downloaded it. You do not sit in momentum names when they're below the 8 and 21 day. You do not hold 20, 25, 35 positions when the S&P, the Qs, the small caps, the bios are below the 8 and 21 day. That is when you're tactical. That is when you're careful. That is when you're more specific. That's not when you don't throw shit against the wall. When all of a sudden you're feeling it a little bit or you're getting some paper cuts like, oh, I want to make it all back in one day. No. That is when you have to be that much more precise and that much more careful. And if you make money, make sure you don't give it back so it can start adding up. Scott, will you be adding more to the long-term accounts? Ken, I add to my long-term accounts every single month. Okay, I have, like I said, I have my own 401k. My wife has a 401k. She also is in private practice, so she's a 403b. During the pandemic, I upped my son, who's 13's 529 plan from 500 to 750. So there are times to do it, and I still have my cash, my blood in the street account, which hasn't been put to work yet. The indices to me have not been blood on the street. I'm sorry. I'll go over the weekly chart of the SPYs and the Qs and show you where we are based on the weekly chart. So to me, I'm not putting that to work yet, but it's getting closer. During 3 times since the financial crisis, I put my blood in the street account to work where we fell like 15% in the S&P, and then I put a certain percentage in every 5% lower. And we did that during the pandemic all the way down to 30% off highs, and it did very well. So if you can contribute every single month, you don't need to do something like that. But if you have an account, a cash account, that also works. And that's getting pretty close. And then I have my 3 different, my accounts that I trade for a living, right? I have an active account, a swing account, a box account, and an options account. And all 4 of those have really, for most of this year, been in 95% cash because technically there's been no reason to put on risk except for this active sequence in March that ended. If you look here at the chart of the SPYs, right here was the first time I put some money back to work where I was able to hold things for more than just, a minute, an hour, a day. If you remember during this active sequence, which was about 2.5 weeks long, look at us above the 8 and 21 day. That's when Tesla had a nice move. That's when Apple had a nice move. That's when Amazon had a nice move. But right here, okay, right there, okay, this was your red dog reversal sell. I remember the 630 Club right here. Who remembers the 630 Club where I tried to be cute and I played Star Wars, right? I said there's been a change in the force. What did I mean? I mean the bears took control back and there was no reason to be long. It was like a Wednesday, I remember, and it was right here. That got me to take a lot of risk down, okay? And then all of a sudden, you put in this pocket pivot, and then on Thursday, you had the chance again, right? I list those sell rules, not for my health, not to try and be cute, because it's going to save your life, your financial life, if you follow them, right? On last Thursday, right here, we opened up above a prior high. Some of you guys might have been a little bit long because we were acting a little bit better there, trying. Remember, kind of like here when we was trying, but here, the bulls stayed in control. Here, the bears took the ball back like that. You opened up above a prior high, couldn't hold it. Then you took out a prior low. Is that strong? No. That's get the hell out of the way. Get short. Make sure you stay in cash. And then look at the size of this candle on Thursday, engulfing this entire range. So is this candle bigger than all of these? Yes. What does that mean? That means there's potency and power to the downside. So anyway, that led into some downside and follow through on Friday. And now if you look here this morning, basically the S&P futures are down 35, which is better. Get it out of the way. You have the NASDAQ futures are down 93. Europe is down actually not too bad, 1.6%, kind of like what we were down on Friday. Asia was the standout, to the downside. You had the Shanghai down 5%. You had the Shenzhen, which is their tech sector, kind of down 6%. They're still grappling with COVID over there, believe it or not. And they're doing like zero policy on it. So, and they also have their own real estate problems. They're going through their own 2007, 2008 with real estate. In China, over the course of the past decade, people were buying 2, 3, 4 homes or apartments or whatever the hell they do there, and building those ghost cities where people didn't exist to try and hide the fact that their growth wasn't slowing, and a lot of things are coming ahead in China. So, besides, and then you have the Russian-Ukraine, the invasion of the Ukraine that's still friggin' going on, and it seems like it's persisting, which is definitely hampering, global growth and global sentiment. And so there's a lot of macro narratives. Besides the Fed, who's been flooding our markets with liquidity since 1971 and 2008, and then giving out free money for the pandemic, all of a sudden that caused rampant inflation, which they have to take back. They have to reduce the balance sheet. They have to do runoff. They have to raise rates, and those are all things that aren't friendly for equity. So anyway, when all that's happening, I'm not trying to be doom and gloom here. Hey, we might wind up getting kind of like a double bottom, right? We might get something here where all of a sudden we come into this zone, 410 to 419, and perhaps just like you had like a double top-ish here, maybe we get some support. The problem is though, if you look at the weekly chart, okay, remember I was showing you the weekly chart, so we really didn't come in a whole hell of a lot. This was, by the way, this was a 2018 taper tantrum right there. That was when the Fed had to raise rates back in 2018, and that was when we didn't have any of these problems. We didn't flood the world with free money to try and ward off, what's it called, COVID, the COVID, whatever it could have been. We didn't have the invasion of the Ukraine. You didn't have oil at 100 and something, and the S&P was off 20%. So we're not even off 20% yet in the S&P. So that's why I'm always like, be a little careful here. Look at the size of this move that we've had since the low in 2020, or even from the prior high. We didn't have that here, and then we went down 20%, and the NASDAQ was down 24% or so. So I'm just saying, be careful here that if we don't hold this spot, okay, you could see a lot lower. We could see it. You're already seeing key names in the world happen. I'm not saying Netflix is a key name in the world, but look where Netflix is. If you think to yourself, you like anything, if you're like just like, oh, it's Netflix, it has to go up. Well, if you took Netflix into earnings because you thought it was already cut in half, well, look what happened to you. It's back to like 2017, 18 levels. And by the way, it's coming into a pretty decent level. So for today, for segment wise, use 212.56. So this is the weekly chart of Netflix. You want to see the weekly chart of Facebook? Here is when it broke the ascending channel. Here is where the bear flag continuation pattern happened. We did get a decent bounce right back into resistance, and now it's already below 185. Facebook can get to 137. I'm just saying, it has earnings this week. Google also just broke. Google's not going to save shit, excuse my French. Look how elevated Google is. I was showing you guys this level in Google on the weekly chart for a while, and it broke just like that. So now maybe there's some support into this 2330, or it has to work lower. And then for 2 weeks, I've been showing you how AMD is leading the semis lower with NVIDIA. And guys were scared when I'm like, guys, I'm like, wow, I didn't even see this head and shoulders top pattern when we were over here. And all of a sudden, the neckline proved to be a neckline, meaning it broke below, accelerated down, and it's on its way towards maybe 72. So I'm saying these are weekly charts of key stocks. So, if you go back to the SPYs, this is where we are. We're not that on an energy probably top. The XLE, I think, is done, by the way. People are like, well, my money's hiding in Chevron and the XLE. I'm like, not anymore. Okay, you want to take a look at Chevron? This is what Chevron just did. Chevron just broke its ascending channel here. So if you've been hiding in Chevron, this was your out, 171. And look how fast that happened. Look how fast, and it showed you relative weakness out there on that Thursday. So, that's not going to be a spot where you can just go to. And if you look at the XLE, you'll see it's the same thing as Chevron. It broke its ascending channel. It's now below the 821 day. So there's I'm not getting, this daily, weekly, there's nothing so actively bullish about any of these things. The only thing that's actively bullish now is maybe we accelerate and we turn, maybe stay down, and then we get a little bit of a turnaround Tuesday for a trade. You need to be actively bullish on your process where you're coming in today with risk down because we closed so bearish on Thursday, Friday, where maybe today we could buy versus a 5-15-minute low and then figure it out. So if you want to look at a few key names to watch, you got to watch this Tesla. I'll tell you, although it was a fantastic quarter, okay, which it was, and it was so damn impressive that, he could pull that off in this kind of environment. If Tesla doesn't hold this 973 to 976 area, it might come in just like everything else. There are some guys who might even short that to make money. Okay, well, first thing it's right now, it's 994. I think Tesla's open below 994. So for today, for Tesla, I looked before, it's down 23 points, so it's below 994. You better watch this 973 to 976 to see if it holds. If that doesn't hold, this could all of a sudden turn into a little bit of a bear flag breakdown, and maybe you can make money shorted. There are guys on the Alpha team that made a lot of money short Amazon. Why did they make money short Amazon? Because look at Amazon. Amazon had a bear flag, and it broke below 3,072 and then broke below this 2992. So for those who are good at shorting, they probably made decent money shorting Amazon. Anyway, or you just out of it, or you were in it and used it as a stop. So what's the next level on Amazon? 2709, 2736, right around here is your next level. Maybe after 3 down days, you can get like a red to green trade where you could buy versus level. Okay, so you made money in ARK and Tesla. Well, ARK was at lower lows before the SPYs and the Qs. So if the SPYs don't hold the March lows, I would think that ARK is going to go to 40. You want to look at ARK. ARK gave you clues right here, okay, that you better get out of the way. There was a nice little active sequence. It broke 68. It's already below this 52, 56 area, well before the market. So if the SPYs are going to go test 410 or that area, this is probably going to wind up being in the low 40s, showing relative weakness. Yeah, on April 5th. April 5th was a big day. ARK broke 68. It's been for sale every rally it's been for sale for every rally for the past year and a half. But there were little spots that you could have tried it, and then when it failed, you had to get the hell out of the way. Apple, does Apple turn into a source of funds? We'll see. A lot of people, like right here, you had your reversal where Apple got rejected into resistance, couldn't hold the prior high. So on this Thursday, if you followed your sell rules, look at the sell rules. If you long it, you trim it to strength. Okay, if you long it and it doesn't hold the prior high, you reduce. If it gets red, you're trying to reduce more, and then all of a sudden it starts breaking levels. That means it's changing. So anyway, Apple's probably approaching the 200-day side. Watch Apple today. Does Apple hold the 200-day, or does it start to play catch up to the downside, kind of like what Microsoft did? Did you see the candle in Microsoft last Thursday? My goodness. Okay, right into the gap area. It was sold, couldn't hold a prior high, and then took out a prior low. Look how bearish this candle was. So for today, let's try and get a little bit, switch a little gears. Now, what could you have seen last week? How could you have switched gears? How could you have behaved yourself? Let's talk about now. Okay, you have a whole list of earnings this week, which I'll put out. You have Facebook this week, you have Google this week, you have Amazon this week, you have, I think, Apple. You have a lot of them. So the question is, do they beat them up enough that maybe they could rally into numbers? Or, what the fear that people have is, what happens if you get like an underwhelming report, which is what Netflix had. Netflix was already cut in half and it got cut in half again. So what happens if Amazon's report isn't great, which it probably won't be, right? I'm still waiting for my dishwasher. I did my kitchen this summer. My wife did. My wife, well, all of us did. Well, it's my kitchen too. But we just got our hood last month for our whatever it's called, the stovetop, and we're still waiting for a dishwasher. So if I'm still waiting for a dishwasher and people can't get contractors and you can't get goods and services, how good is Amazon's earnings going to be if you can't get stuff? And so anyway, but they do have the stock split coming, so maybe they beat it up enough post earnings, then you can position for maybe a bottom in the market and some kind of move for the split. People are like, why didn't Amazon go up in the stock split or Google even? I'm like, because they announced their split and you had to sit through earnings to get to the split. That's a little fishy. Anyway, Bitcoin broke its level. It's basically telling us it's still risk off. It tried to do a little bit of a red dog reversal last week and then failed. So be a little careful here. Bitcoin's been in a crypto type winter. It's giving you little things to do. If you remember, here is where it broke its trend and we were out of the way in 75% cash for most of this. Then we went sideways. Right here looked better. I know I put risk back on and did a little bit of a trade, and then same thing. You had a flag type pattern here that broke to the downside. Then I was showing you this ascending little channel here. It tried to do a red dog reversal and tried to rally, kind of like what the market tried to do before Thursday of last week, and now it's breaking below. You have 32 to 37 here, so we'll see. Does Bitcoin hold this area and just hold the bottom end of the channel, same way it does the Qs? Do the SPYs hold the bottom end of the channel? I don't know, I have China on the mind, maybe because of Shanghai was down 5%. And it could happen. Yeah, some people pointing out the red dog. You're not even looking at the weekly chart of Bitcoin, because if it fails to hold this spot, fails to hold, it could go back to 20,000, which is where I built my crypto account. I built my crypto account here. This is when I started it. I didn't get crypto at 1,500. I started right here, right before that big buy of 20, and made like, I don't even know, 4 or 5 times on my account into this run. And look at that, it's above the 8-day, above the 21-day. Lots of patterns before it finally broke here. So looking at the weekly chart pattern, just like you have to look at the weekly chart pattern on a lot of things, it has to hold this area. Otherwise, why of course it can. Why couldn't it hit 29 again? And then if that doesn't hold, then it's all. So we'll see what happens here, guys. It's going to be interesting. You're going to have plan A, B, C. You're going to have to have your confidence. You're going to have your marbles. It's very easy to lose your marbles in a market like this if you're not thinking clearly, and if you get frustrated and you revenge trade. They do throw some misdirection. All of a sudden, you get a good day, and then you take home some risk, and then the next day there's no muscle memory. We've had that too, where there's been like no muscle memory here and there. So it's time to be careful. But then there's going to be a time for huge opportunity. When we get, whether it's a double, whether we hold that area or all of a sudden, it triggers and you're out of the way, and then we get a real low, a real wash out low. There'll be so much money to be made in the next active sequence. And the only way you're going to do it is if you're not caught in it. And how do you not get caught in it? You follow your rules and your process, and hopefully maybe you're a member of my community, because, although maybe in the last 2 weeks guys have little small paper cuts, nobody's just throwing shit against the wall. No one's following the guys out there that say, hey, stocks don't go down, Mr. Davy Day Trader. Yes, they do. And you don't want to follow people on TV that all they've been doing is tell you to buy PayPal since, I don't know, since 160, and I think what's PayPal, below 80. You have to have your rules. So don't just follow someone because you think this, but don't even me. Just try and learn the system and process so you could breed confidence together. So with that being said, let's go back to the daily chart. Let's end it here. So let's go to the Qs. The Qs have their low right around here. So for today, okay, do the Qs reclaim 325 from 340s? Do they reclaim 325 to release some pressure? Do the Qs hold this 317, 318 area? That is the March lows. Okay, so do we hold this area and reclaim Friday's low? If we don't, and you see Netflix break last week lows, you see Facebook not be able to reclaim whatever it is that is, you see Tesla not hold that 973, 976, you just got to continue to stay out of the way. And if this does break this area, I'm sure the SPYs will be testing it because the Qs have been leading the market lower and the semis have been leading tech lower. So you got to watch the whole chain of events in order to connect the dots and keep yourself in the right position to make some money, or just be in lots of cash and wait. You're allowed to wait also. If you're not seeing it, you're allowed to wait. You can sit on your hands. Big defense, strong defense wins championships. Offense wins games here and there, but the stronger your defense, during times when you're getting bombarded, the more staying power you're going to have. Listen, guys, thanks for tuning in. Wow, it's already 6:54. I definitely gotta jump right here. We do have a deal, guys. There's a deal that I see them on the Alpha team already. $7 for 7 days just to try the Alpha team, where you'll see, hear me all day long. You'll see when I put positions on, take them off. You'll hear about 500 different people talking about, what's happening with the market. So it could help you if you're sitting by yourself, in your house or in your office, and you feel like you're trading alone. Well, don't trade alone. There are traders out there that are responsible, that are good people, that could help, and that's what we're here to do. We're here to help. And if you do it for 7 days, I think you're going to wind up turning into, a permanent member of the community besides just, the 630 Club. And I appreciate you guys tuning in. And sorry for being a little late, and I got to jump. We got a lot to do today, guys. Be on your toes. Anything could happen. Anything could happen. Protect your capital. Protect your brain capital. We have a long week ahead. Be prepared. I'll see you guys later.